All right, how's everybody doing? Welcome to our session, our webinar on the second COVID-19 relief package. Today we have our primary tax and accounting counsel, Ms. Alexis Davenport and Mr. Alex Jaech. They're going to explain to us the new stimulus bill, and we'll learn a little bit about available funding, tax implications it'll have as we come upon filing season, and how this new bill may impact any existing government funding that we have. So please feel free to put any questions or comments that you have in the chat. We're going to try to address all these things, and Alexis and Alex specifically have created this for tour directors, tour guides, and tour operators, and DEOs who we have the privilege to serve. So there'll be very specific things in there about what we do and how we do things and how this bill impacts that. So without further ado, I'm going to pass it over to Alexis and Alex. Thanks so much.
Hi, everyone. Good afternoon. We'll go ahead and jump right in. I'm just gonna share my screen here. So today we're presenting the 2020 tax updates. This is going to be based on the new Consolidated Appropriations Act of 2021. Specifically, what we're going to focus on today are going to be a few of the new tax benefits for individuals, the employee retention credit, the self-employed sick pay credit, the 100% business meals deduction, the EIDL grants and loans, and then the new PPP updates. So the first thing I want to focus on today is going to be specifically for your individual tax returns. So as a part of the CARES Act, which passed last year in 2020, individuals were allowed to take a penalty-free distribution from their retirement plan up to $100,000. So if you took a distribution from any of your retirement plans last year to kind of help you out throughout the year, you're allowed to report that on your tax return and you won't have that 10% penalty. The IRS has also said that you are allowed 3 years to repay that distribution to make it tax-free. So the way that you can do that is that you can report that income over the next 3 years of tax returns. So you would take a third of whatever the distribution is that you took. You will report that on your 20, 21, and 22 years tax return. And if you repay that distribution prior to that 2022 tax return, you can go back and amend your returns. So that's basically tax-free money. Now, the bill that just passed did extend this, but only for individuals in disaster areas. So you would have to be in a federal disaster area to be able to continue to take this distribution penalty-free in 2021. Did you receive your entire stimulus in 2020? If not, you're allowed to claim the rest as a credit on your 2020 tax return. So a lot of people had changes during the year, whether you may have gotten married, maybe you had a baby, and that 2020 stimulus that you received doesn't really match what you could have received for the full year of 2020. So what you're able to do is file the recovery refund credit, and you would file that on your 2020 return, and you would get the rest of your stimulus that you're owed. The last tax benefit for individuals that I want to focus on is the earned income credit and the child tax credit. So these are two major credits for individuals that earn under a certain income level. So this new bill allows you to determine which year's income you want to use to calculate this credit. So when you go to prepare your return, or when your tax preparer goes to prepare your return, you want them to look to see if your 2019 income or your 2020 income gets you the best credit for either one of those that you may qualify for. So I briefly just want to touch on who is considered in business in 2021, because a lot of the items that came out this year are specifically related to people that are so-called in business. So I just want to make sure that you understand that every level of tour director that's on this call today is going to be considered in business, whether you are a specific business entity like LLC, partnership, S Corp, or corporation, whether you run your business as a sole proprietorship, whether you're an independent contractor, a gig worker, or just a straight self-employed individual. So even if you don't have an EIN number, but you're still conducting business, you're still earning income, you still have expenses, you would be able to qualify for all of the items that we're going to talk about next. So the first thing I want to focus on business related would be the employee retention credit. So this is going to be huge for anyone who actually has employees. So previously under the CARES Act, we were allowed a refundable tax credit for 50% of qualified wages up to $10,000 per employee with a max credit of $5,000 per employee. So this new bill allows you to take this credit now from January of this year all the way through June of this year. So basically 2 quarters of the year. You have an increased percentage of qualified wages. So instead of the 50% of wages, you get to take 70% now. They made it a little bit better to reach the eligibility because they reduce the year-over-year gross receipts decline from 50% to 20%. So you really only have to show a decline between the previous year and the current year of 20%. And then it also increases the limit on employee wages, where it used to be $10,000 per employee. Now it's $10,000 per employee per quarter. So this will, be a huge effect to your bottom line because the credit is going to be dollar for dollar. This next item is something that I believe that everyone on this call would be able to take advantage of, and something that, very little people actually know about. They expanded what's called the self-employed sick pay credit. So it's available to any self-employed individual who was unable to work during the period of April 1st all the way through December 31st because either you were subject to quarantine, which would be pretty much everyone across the country, well, across the world, really. You had to self-quarantine due to COVID-19, or you were seeking diagnosis to determine if you had COVID-19. So pretty much everyone would kind of fall into one of those 3 buckets. So once you get past that, the individuals can receive a sick pay credit of the lesser of $511 per day, or 100% of their annualized self-employment income. So you're able to take this, but only up to a 10-day cap. And there is a specific form that you would need to fill out on your tax return to go through this calculation to determine what your credit would be. It goes further to also say that you can receive sick pay of the lesser of $200 per day, or 67% of the average daily self-employment income in the event that you were unable to work because you didn't have childcare, or your daycare center closed, or if you were caring for a sick individual. And again, this one has a 10-day cap as well. So this is going to be something that will affect every individual on this call. And it's basically like free money for the time that you were not able to work during quarantine. There's also an employer credit available for the sick pay that's paid to employees. And that one's going to be 100% of the employee wages that you pay related to these items. The next change that was made was 100% business meals deduction. Previously, we were only able to take 50% of the deduction for eligible meals. The new law allows for 100% of qualified meals paid or incurred to a restaurant. They specifically said that because they want you to know that you don't have to sit into a restaurant. It can be carry out because lots of restaurants are closed, but they're using this kind of as a stimulus for us to spend more money at restaurants. This increased deduction is eligible from the beginning of this year all the way through the end of 2022. And I just want to point out that entertainment expenses are still not deductible. So if you have any element of entertainment on your bill, you need to make sure that it's separately stated on the invoice or completely separately billed. So the next piece that I want to talk about is the EIDL grants and loans. So our new bill provides $20 billion for EIDL advance grants of $10,000. And those are available for small businesses that were in business by January 21st of last year. You have to have less than 300 employees. You need to be directly affected by COVID, which again would be everyone on this call. For this particular EIDL grant, you would need to be located in a low-income community, and they classify that as being a 20% poverty rate or 80% of the statewide median income. And the way that you can check that is to go to the US Census site and put in your zip code for where your business is located to see if you are considered to be in a low-income community. And then the last piece would be is if you suffered a decline in your gross receipts greater than 30% during an 8-week period during March through December of 2021. And you would just compare your year-over-year gross receipts. So another big item as it relates to the EIDL grants is for all of you guys who applied last year and didn't receive what you were expecting, didn't receive that entire $10,000 advance that you were expecting based on the application that you filled out. And the reason for that is because the EIDL ran out of money so quickly. And to be honest with you, when you think about the amount of money that's been set aside, even for the new grants for this year, you have to make sure that as soon as they open up this program, that you are Johnny on the spot, ready to do your application, because you want to be first in line so that you will get those funds available. But this new bill did allow for new funds to be allocated for all of those business owners that did not receive their full advance that they expected to receive in 2020. They still haven't said specifically exactly what you're going to need to do to get this money. We think that there's going to be a new application that you're going to have to fill out, but we're still waiting for the SBA to really come through with specific guidelines on what you need to do. And some of the last pieces that I want to focus on the EIDL is that the SBA is no longer requiring taxpayers to deduct EIDL advances from PPP forgiveness applications. So this is going to be huge for a lot of you guys who got PPP and EIDL, because the previous law stated that for your PPP forgiveness, you had to deduct any money that you received from your EIDL advance. Now you can go back and amend your forgiveness application so that you can get full forgiveness for your PPP. One of the largest changes to benefit the taxpayer is going to be that the advance is not taxable income. So any part of that $10,000 that you received is not going to have to be reported as income on your tax return. And any of that money that you spent on your expenses for the year, you can still use as deductions against your taxable income. Previously, they were not going to allow you to take those deductions for any money that was anything that you use with those EIDL funds. The application is still for the EIDL, which is the actual loan. It's a loan application. But you have to fill out the loan application to receive the advance, no matter what. And then you can determine whether or not you'd like to receive the loan that's offered. The loan is still a very good loan. It still has good terms for small businesses that actually need money for the year. I think the interest rate might be at about 3.75%. But one thing that I do want to point out is that if you take this EIDL loan, the SBA does impose strict guidelines on businesses that accept this loan. So make sure that you read all of your terms and conditions before you agree to receive the loan. The advance is going to be totally separate from the loan. You would still be able to get that $10,000 without actually signing up for the loan. So next, I'm going to turn it over to Alex so he can talk about the new PPP updates.
Yeah, Alexis, we actually have a few questions about what you covered in the chat. Do we want to address those right now?
Sure.
Before I step in.
I thought we would receive a $600 check from the U.S. Treasury, but lo and behold, I got a check only for $44.35. How come? Well, your stimulus is always going to be based on the amount of money that you earn or that you reported on your tax return. There are certain phase outs. So if you are single, and I think if you made over about $75,000 for the year, your stimulus check would start to be phased out. Not sure why you would have only gotten a check for $44. So I guess I would need to know your specific situation, but that seems a little bit low to me. Let's see. So the next question, would those businesses or individuals who received EIDL loans from the previous stimulus package be eligible? And how do you know if you got the full amount last time? So the full amount last time would have been $1,000 per employee at the time that you applied for that EIDL advance. So if you got anything under that amount, which lots of people did, you would know that you are eligible for the rest of that money to be returned. And so far,
oh, go ahead. I'm sorry. No, go ahead. I'm sorry. I'll follow up.
And so far, there hasn't been specific guidance about if you are able to apply for this new advance, as well as if you applied for the old one. I've seen a few things, but I don't want to specifically state that you can, because we're still waiting on SBA to come out with a lot more further guidance so that we can, make a proper determination. What were you going to say, Vaughn?
I was just going to ask about, I was going to ask that same question. I'm assuming your response was about individuals. I was going to ask that same question for businesses, because I know the businesses were eligible for quite a bit more than that for the EIDL loan. So I didn't know, I was going to ask the same question about how do you know if you got the maximum amount for your business? Would it be in, as for EIDL loans?
Well, that would be something different when you're talking about the loan versus the advance. So the advance is going to be the grant. So that's going to be the amount of money that you would have received and that you would not have to pay back.
Got it. Okay.
So that's going to be across the board. If you had employees, you would have gotten that $1,000 per employee up to $10,000. Okay. As far as the loans, I hadn't heard where you didn't get the full amount of loans. I think it was the advance that kind of ran out early because so many people, were applying so quickly. But as far as the loans, I think that what you received is what you would have gotten.
Gotcha. I was confused about that. Sorry about that. Okay, thanks.
Let's see. So there are EIDL loans which need to pay back and grants that don't. Yep. Same thing that I just said. So the EIDL advance is the grant piece of it. So even though you fill out the loan application, there's that advance that gets taken into consideration no matter what. So you fill out that loan application and you would get that grant, and then you can determine whether or not you want to take the loan as well, if you are approved for the loan. Let's see. Do you have to refinance your EDIL into your PPP if you apply for PPP after having received EIDL last year? I think Alex might be covering this in his section. Are you?
Yeah, you don't refinance your EIDL loan into your PPP. They're separate programs, so
Yep.
they're not going to be mixed. Yeah.
Let's see. Let's see. Can you get both the EIDL loan and the grant? Yep, sure can. And then will the 100K per person IRA withdrawal penalty free be extended to 2021? So far, we have not seen that. So only if you took withdrawals during 2020 will you be able to do that penalty free withdrawal. For 2021, so far, the only thing that we've seen is if you are in a disaster area. Let's see. I was talking to my accountant this morning. He said that I would only be eligible for about $3,000 based on my 2019 income divided by 12 months. Well, I only got income for January through March, so my yearly income wasn't a lot. So my PPP doesn't come close to monthly losses for the remaining year. I think Alex is going to cover this in his PPP section. Okay. Alrighty, so it looks like that's about it for me. So I'm going to resume the presentation and give it over to Alex.
I think can we go back a couple of slides where?
Oh yeah, sure. There we go.
Okay, well, good morning, everyone. Nice to be with you today. I'm going to be talking about the PPP program. This is for, like Alexis was talking about, this is a business program, but I think everybody here qualifies as a business. So if you are an independent contractor or if you are an independent tour director that you get 1099s from the different tour operators you work for, you are a business. So you would qualify for this program. The idea of this program is to help businesses pay their employees to replace wages that would otherwise be lost because of the pandemic. And they do that by funding the payroll for these businesses. Well, if you're self-employed, you don't have payroll for yourself, but you do have self-employment income, and this program will fund your self-employment income as well. So I think this will be important for everybody, and I think all of you will qualify for it. So the way that this works is actually a loan program. It turns into a grant later, but to start, it's a loan program. And these are loans that are issued by your bank, and they're guaranteed by the Small Business Administration. So the SBA says to all these banks, go out and make these loans. We'll promise to pay it back to you, so you don't have to worry about people not paying you back for these loans. The initial funding was $349 billion. That was in the initial CARES Act, the first relief package that came out. If you were involved in the first round of these, you might remember that that money went really fast. And they had to do a second round of funding to keep the program going. So they added another $320 billion in the second round. That was in late April, they did that. So a total of $669 billion of PPP loans were made in the first round. It all went fast. All the funding was used. And the program was closed since, like June, I think. So as part of the Relief Act that just came out, there's a section of it called the ACRRA, which is called the Additional Coronavirus Response and Relief Act. They funded an additional $284 billion for more PPP loans. And it actually created a new type of loan. So now there's two PPP loans that you can get. You can get the original PPP loan. If you haven't got one before, you can still get that first PPP loan. And if you have got one for you can get a second draw loan. So you get another chance to get more funding from this program. To get the second loan, you have to have used your original PPP loan. So you can't get both at the same time. You can only get one at a time. And you have to have used all of the proceeds of your first loan, or you will have used them by the time your second loan gets funded. So if you haven't used them all your loan proceeds from your original loan, use them up before you apply for the second loan. Now, this round of funding is the smallest round. $284 billion. It's a lot of money, but it's going to go fast. So we've got to be ready. If you want to get this funding, you have to be ready to go for it as soon as they open the applications. The Small Business Administration just announced this morning they will open applications for first loans will be open on Monday. And then if you're getting a second loan, they'll start taking those applications on Wednesday. The applications won't be available everywhere. They're going to start off with just what they call community financial institutions, which is like small banks, local banks, trying to give access to capital to people who maybe don't normally have relationships with the big banks, or who normally don't have great access to lending and good capital. So if you bank at one of those small banks, you might be able to get started next week on Monday. If you bank at a bigger bank, it'll probably open up. They haven't said when it's going to open up, but it'll be soon after that, probably in the next week after that. So be ready to do your application and to get your loan, because this really is going to end up being free money that you can use to pay yourself to replace the wages that you've lost. So to get the second loan, if you've already gotten your first loan, there's a new test to qualify for it. Your gross receipts have to be 25% less than they were in the same quarter in 2019. So for probably all of you that are going to qualify for this. So if I make $50,000 in the second quarter of 2019, and in the second quarter of 2020, I made $25,000 of gross receipts, then I would qualify for this second round of funding. There's not a specific test for the first round. You just have to kind of certify that you're impacted by COVID-19. Let's go to the next slide, please. Okay, so how do I know how much money I'm eligible for as part of this program? So the loan amount is 2.5 times your average monthly payroll cost. If you are in certain businesses, which some of you are, you get to use 3.5 times instead of 2.5 times. So how do you know if you're in the right business? You go to your tax return and look, there's a line on your tax return, on your business tax return, that says something like business activity code. It's like a 6-digit number. It's a code that tells the IRS what type of business you're in. If the first 2 numbers are 72, then you get to use the higher multiplier to determine your loan amount. Okay, so for some of you will be in that business. It's accommodation business is what they call it, and you'll be able to get the higher amount. So that's great. So what is payroll cost? So payroll cost, if you are an independent contractor or self-employed person, look at your Schedule C on your tax return and from 2019 and go down to line 31, and it's called net profit. So that number is your payroll cost for the year. That's what you pay yourself for the year. Okay, divide that number by 12, and that's your average monthly payroll cost. So if you are in a business, an eligible business, you can use 3.5 times the Schedule C line 31 divided by 12. If you have employees, then you get to use the wages for those employees to add on to that number. So the wages from those employees would be reported on your quarterly payroll tax returns. You'll just look on those. There's some adjustments that I won't go into right now, but when you do the application, you can take into account those employees that you're paying. Now there is a cap. $100,000 per employee is what you can use. So down at the bottom here, we have an example of the loan amount calculation for a self-employed individual with no employees. So say I make $100,000 on my Schedule C, divide that by 12, I get $8,333. That is my average monthly payroll cost for myself. If I'm in the right business, I get to multiply that by 3.5. So my maximum loan amount is $29,166. And that is money that's going to be fully forgiven if I'm a Schedule C filer with no employees. That's going to be 100% forgiven. Okay, so after you get your money, your next step is to spend your money. So there's a few things you can spend it on. If you're a Schedule C filer with no employees, you get to spend that money on yourself. You pay yourself with that money, and that'll be forgiven. So that's great. If you have employees, then you've got to spend that money on a few different things in order to be eligible for forgiveness. So the big thing is payroll costs. 60% of what is forgiven must be payroll costs. The rest can be made up of these other items. So mortgage interest is one of those items. Rent is one of those items. Utilities is one of those items. There's a few other smaller ones that were added. Some of them are like property damage. There's a few other minor things that won't apply to most people. So most of it must be spent on these four things. Again, if you're a Schedule C filer, if you're self-employed, what you pay to yourself is forgivable. Alexis covered this earlier. There used to be a reduction if you got one of those EIDL advances. There used to be a reduction in what is eligible to be forgiven. That is no longer the case. There's no reduction for that anymore. So that's very taxpayer-friendly news. That's good for anybody who received that EIDL advance. Now there are some other reductions, and these are for businesses that have employees. If you reduce the number of employees that you have, or the number of hours that they work, or if you reduced the amount that they are paid, the amount of salary that they are paid, that can reduce your forgivable loan amount. I think that probably doesn't apply to most people here. If it does, and you want to talk through how that works, feel free to ask me about it or give me a call, and I'm happy to talk with you about how that works. It gets a little complicated, so I'm not going to cover it right now because it's just a little too complicated to discuss in this setting. But just be aware of that if you have employees, that could be an issue for you. All right, let's go to the next slide. Okay, so how do you actually apply for forgiveness? So if you got the first loan, you may have been keeping track of all the different forgiveness applications that have come out. So we're on our 4th forgiveness application now. The first one that came out was called Form 3805. And it was a very complex form. I did a couple of them that are hard to fill out. And those are meant for really the borrowers that have a lot of employees, that have a lot of complicated situations going on, and they got large loans. At the same time, they came out with another application that was called the 3805 EZ, which is supposed to be the easy version. It wasn't that easy, but it was a simplified version of that form. Then a little while later, they came out with this other form called the 3805S. That was for borrowers who borrowed under $50,000. It was very simplified, a very nice, easy form to do. applied to most small borrowers and self-employed people. But the new act replaced that form with a new application, which has not been released yet. It's supposed to be January 20th. So the idea on this form is for all borrowers who have borrowed $150,000 or less. It's a one-page application, and you just have to certify a couple of things. You have to tell them the number of employees that you were able to retain because of the loan. You have to tell them how much of the loan you spent on payroll costs and how much you borrowed. And then you have to attest that you followed all the rules of the PPP loan program. That is important to do, and it is important that you do follow the rules. There have been people who have fraudulently obtained PPP funds and have gone to jail already because of that. So just be honest when you fill out these applications. You probably qualify for the loans that you're going to get, but don't use the funds fraudulently. They are going to audit these, and they're going to be pretty aggressive about it, is what we're hearing. So just be careful, tell the truth, and you will be fine. Let's go to the last slide here. We've had some questions about receiving the PPP loan and the unemployment insurance. Specifically, can you get both at the same time? Unfortunately, the answer is no, you can't. The PPP loan is wage replacement income, and the unemployment is also the same thing, wage replacement income. You can't get both at the same time. If you do receive a PPP loan, you need to report that as income to your state unemployment agency. And the rules will vary by state because these unemployment rules are administered by the states. They're all a little bit different. So just report that income as income to your state unemployment agency. They may suspend your unemployment for the period that you're getting PPP funds. They might just reduce it. It really depends on the state. So be careful of that. If you're on unemployment and you're thinking of getting a PPP loan, it might be more, it might be less, depends on your situation. One factor to consider is that the unemployment income is subject to federal income tax. It could be subject to state income tax depending on the state. You'll have to, in California, it's not subject to state income tax, but in other states it is. So be careful of that. PPP proceeds are not taxable at all. The forgiveness is not taxable. The expenses that you pay with PPP proceeds are all deductible. So that is a factor to consider if you're trying to decide between staying on unemployment or getting a PPP loan. You have to consider the tax impact of that. So I saw a few questions come in. Okay, the first question was about PPP and unemployment. I think we just talked about that. You can't really get both at the same time. You've got to analyze which one is better for you. And again, it kind of depends on the state. So you'll have to check with your state unemployment agency to figure out how much that impact is going to be to you. So I did not do the first round. I'm wondering, do I determine the amount or the SBA or the bank? So you fill out an application, you give them your tax return, and you go through that calculation with on the application with the bank, and that'll be the amount that you're eligible for. It is a loan. You don't have to pay it back if you're eligible for forgiveness. So if you're a Schedule C filer and you have no employees, all of the proceeds from this loan are going to be eligible for forgiveness. So as long as you file that forgiveness application, it's going to be forgiven and you will not have to pay this money back. It's structured as a loan, but it's all going to be forgiven. So it really, in effect, is a grant. Will PPP be forgiven for part-time employees? Yes, it will. For loans under the $150,000, you can use that simplified application. You don't have to worry about the full-time and part-time employee issue. For loans over that amount, as long as your total full-time equivalent number of employees is not reduced, then yes, the proceeds spent on payroll for those part-time employees can be 100% forgiven. Where do you find who will offer the loan? Most banks will offer this loan. So I would use whatever bank you already have a relationship with. Wherever you bank with right now will be probably offering the loan. The banks love it because they get paid a processing fee by the SBA. So they make money that's paid for by the federal government. They love it. They really want to do this. So you should be able to find this at whatever bank you have a relationship with already. Yeah, a lot of us who are tour directors stopped working in March. So it's only 3 months worth of income. Yeah, so unfortunately, you have to use the 2019 income on your Schedule C. 2019, so the year you stopped working, I would think would be 2020, right? So you get to use the year before that, which was a normal year before the pandemic started, and use that to determine your loan amount. While one can still apply for round one, isn't it exhausted? It was exhausted. This new funding, the new $284 billion of funding, is for both round one and round two. So both first-time borrowers and second-time borrowers can apply for this new loan. And it looks like they're opening the loan for first-time borrowers just a couple days before they open it for second-time borrowers. So the first-time borrowers get a little bit of a head start. If you're on top of things and you apply right away, you get a little bit of a head start over the second-time borrowers. Okay, I'm a mixed earner. I work more as a freelancer, but I did get some minimal W-2 income. Can I still apply for both EIDL and PPP? Yeah, so yes, you will use your freelance income, your independent contractor income to determine the amounts that you're eligible for of the PPP loan. And your W-2 income will be excluded from that. But yeah, you can get the PPP loan even if you're a mixed earner. For many tour operators, their number of employees in 2019 was higher than it is now. How will that affect the amount of the PPP loan and the forgiveness? That's another good question. So when you apply for the PPP loan, you use your payroll. There's a couple of options, but the best option is to use your payroll from 2019 to determine the amount of the loan. Now, if you get a large loan, you will have to reduce the amount of forgiveness if you reduce your payroll or your number of employees. That calculation is a little complicated. If you want to talk through it, how it works, I would give me a call sometime. My phone number is at the end of this presentation. I'm happy to talk through it with you. It's just a little tricky how it works, and I don't think I have time to explain it in well enough detail here to make it make sense. But if you want to talk through it, I'm happy to talk through it with you, and we'll explain how that works. Where do you find the NAICS code? So that's on your tax return. If you have a Schedule C, let's see, there's a box at the top of the Schedule C. It's box B. It says enter code from instructions, and that's the code. So if that starts with 7-2, then you get the additional month of funding. If you have a partnership, you file a 1065, it's box C on the first page of your tax return. And if you have a corporation, an S corporation, it's box B on the first page of the tax return. That's the code. Okay, is rent personal rent? Rent is business rent, so it's it doesn't count your personal like apartment rent or home rental. It's rent that you pay that's related to your business. Yeah, here's a comment on unemployment. I believe you can claim as a lump sum for 1 week and then resume as normal the next week. Yeah, that may be the case in some places. Again, it depends on the state. I don't know how it works in all 50 states, but it may have, it may have some impact. Some states may take the position that, this is replacing 2.5 months of income, so they might suspend your unemployment for 2.5 months. And then you can get back on it. How long is the spend down period? So you have to spend the money that you get, you have anywhere between 8 and 24 weeks. And you can choose how long you want it to be. It can be any number of weeks between 8 and 24 weeks to spend all of the loan proceeds. Let's see. The calculation, is the calculation based on line 31 on the 2019 return. Yeah, if you are a Schedule C filer with no employees, yes, that line 31 is your wages to yourself for 2019, and that's what you base the loan amount calculation on. It's the same calculation is used for the forgiveness amount for your Schedule C filers with no employees. It'll be the same number, so 100% of your loan will be forgiven. I earn a small portion of my income as a W-2 employee and a majority of my income as a 1099 independent contractor. Will I be able to collect unemployment benefits for the 1099 independent contractor wages in addition to the W-2 unemployment benefit under the new COVID relief law? I am not sure of the answer to that off the top of my head. I would think the answer is maybe, and probably depends on your state. Check with your state unemployment agency to see whether they allow that or not. Can you get PPP second round if your first round has not been forgiven yet? Yes, it just has to be used. The forgiveness does not have to be done yet. So if you're an independent contractor with no employees, then it's used. You can go ahead and do it, even if it's not forgiven yet. If you've got employees, you just have to make sure you've spent all your PPP proceeds on the eligible expenses, use it all up, and then you can apply for the second round. Does not have to be forgiven already.
Alex, real quick, I just want to jump in. Not that we're going to continue with the questions, but because we're getting close to the hour, I wanted to make sure that everyone has both you and Alexis's information. So in case they need to jump off, they'll at least have your information so that they can reach out to you, because I know there are a lot of questions. We have people from there are different classifications, and some that are in the, we have tour directors, tour guides, tour operators that are large over the road tour operators, like myself. And we have some that kind of play both roles where they are, small business owners and tour directors. So, we want to make sure that everyone has an opportunity to reach out to both of you to get some of these questions answered as we continue to go through them. But I know that Alex can assist you with everything you need in terms of tax and CPA. So can Alexis can do the same. I think Alexis also has a program that she's working on where she can help assist you with your any of the loans that come up. Alex, I don't know if you have the same thing, but again, both can address both questions, help you with any tax needs you have. So, they've studied this for us specifically pretty much pretty thoroughly. So I definitely want you to encourage you to reach out to them with any questions, thoughts, and we'll continue. If we have to have another one of these to address any new updates, we'll do that. But yeah, definitely a lot of crossover with people who are both tour directors and also who own businesses. So, and then people have their, individual personal concerns as it relates to this stuff as well. So just wanted to make sure this was up, but I'll let you continue. Sorry to interrupt.
Yeah, no problem. Thanks. Bob. Yeah, this is our contact info. Feel free to give us a call or an email or however you want to get in touch if you have any additional questions that we don't get to today, or if you just want to talk through some things a little bit more, we're happy to do that with you.
And real quick, you said the loans start when? When do they open?
They'll open Monday. The first round reopens Monday, and the second round opens on Wednesday, and that's just at the local community banks. So that if you bank with a national bank, it'll be probably in the next week or so after that. They haven't given us a date yet. But if you bank at a local community bank, you open up Monday and Wednesday.
Okay, yeah, and and you can certainly complete the applications on your own, but if you want assistance, again, I know Alexis has a program that assists businesses with that. I'm not sure about individuals, Alex. I don't know if you or Alexis have something to assist them with the loans, but you definitely can take a stab at it on your own. But if not, if you have maybe a little bit more of a complex situation, maybe want to get some assistance. But those services are available for you to, and that assistance is for you. So okay, go back. I'm sorry.
Definitely, I can help, and Alexis can help with your applications if you want help with that. Okay, next question is my 2019 Schedule C net profit was a loss because it was a young business. I deducted a large equipment purchase. So since I'm Schedule C self-employed person, is it correct to assume that a negative number will disqualify me from PPP as income replacement? Yeah, probably. Since you have a 2019 self-employment loss. Now, if somehow, and you probably didn't, but if somehow you had net income in 2020, and you can file your 2020 tax returns really quickly, then you may be able to use your 2020 Schedule C to get some kind of a PPP loan. Most of you probably did not have net income in 2020. So that may be tricky to do. And because of the limited funding, it may be tough to get that 2020 tax return filed and then do the application before the funding runs out. It is, I guess, still possible that there'll be more funding for this program. I know that the Democrats wanted a bigger relief package than what was passed. I don't know if they're going to pass another round of funding for the PPP program specifically. I think they're more focused on the direct relief checks. But it's always possible that there'll be more funding for this. So if you hear of more funding coming up, keep an eye on that, and you may be able to get more if you miss out in this round. Most of us are on PUA instead of regular unemployment claim. Does that make a difference to anything? No, PUA is just, it's a federal contribution to your state unemployment check is still administered by the state. I don't think it may impact whether it's regular unemployment or the unemployment plus PUA. Can you apply for EIDL if you are on PUA? I believe you can. The EIDL grant is only available if you have employees. The EIDL loan, I believe you can apply for, but that's a loan that you'd have to pay back, and you'd want to be really careful about doing that. Where do you find the PPP application and potential lenders? You would get the application from a lender. Any bank, any significant bank will probably be doing this. Even some of the online banking stuff like PayPal. I know PayPal did it. There's a lending program called Cabbage. I know they did PPP loans. Any banking type business probably is going to be offering these. If you don't have a relationship with a bank and you want to get started right away, go to your local small bank and see if they'll do it, next Monday. And then, go from there. If you have a relationship with a bank, I would use the bank you already have a relationship with. It'll just be easier to get the application done quickly because they already have your information. Home use for work is deductible by a percentage for income tax purposes. Right. Yeah, that is correct. You can get a deduction for that. It's not forgivable. Your home office deduction does not add to the forgiveness amount of your loan. But again, if you're Schedule C filer with no employees, your loan is going to be 100% forgiven. I heard that certified women and minority-owned small businesses can be first in line for PPP. Is that true? Sort of. I think that's what they're trying to accomplish by going to these smaller banks first. They're trying to get into the communities that don't traditionally have really good access to capital. People who have relationships with the big banks like JP Morgan and Capital One and Bank of America, those people have access to capital that's available to them, all the time. So by going to these community banks, they're trying to target businesses that are owned by minorities and other disadvantaged groups. And that's kind of the way they're approaching that. I haven't seen anything where you actually give like demographics information on the application. So I don't think they're doing it directly, but they're kind of indirectly trying to accomplish that.
Right. I just want to add in just to piggyback on that. Yeah, Alex is right. It's going to be those community banks that have those specially allocated funds for those groups. And so it's not necessarily first in line, but they have specially allocated funds available to certain groups.
Yeah. Okay. So there's like funding set aside for certain groups that that will be reserved to kind of make sure those groups get access to capital. Is HSBC in New York City a community bank? No, I don't think so. I think that's a bigger bank. That's not gonna get access on Monday. They're really looking at small local local banks that,
Mhm.
yeah. Can you apply for PPP when you're not a resident in the USA? I don't know. I think
I don't think so.
I don't think you can, but I'm not 100% sure. If you shoot me an email, I'll look up the answer and I'll let you know. But I'm not sure. I don't think so, but I'm not sure. All right, I think I made it to the end. If there's any more questions, I'll stick around for another couple minutes. Is there a seasonal income equation? Yes, there is. There is a seasonal income calculation for PPP. If you have a seasonal business, there's like an alternate method to calculate the forgiveness and the loan amount. You just use whichever one works better for you. And if you want to talk through how to do that, then give me a call or shoot me an email.
All right, we really appreciate you guys joining. We hope this was, oh, I'm sorry, can you see me? I'm sorry, can you hear me? Can everybody hear me? Can you hear me, Alex?
Yeah.
Okay.
Yeah, we can hear you.
Thanks. Okay. So no, I just wanted to let everybody know that we appreciate you joining and taking the time, and we hope we were able to get this information to you, and we try to get to you in a timely manner. And even though maybe some of this stuff hasn't been worked out, or maybe some additions or some changes, I don't know, Alex or Alexis, if the new administration, there'll be some changes to that, or maybe some additions to what is already being offered. But we wanted to make sure we get this information out to our community, because we know how much is necessary. We've been one of the hardest hit industries in the world. So it's very important for us to get this info, and for us as an organization to keep you updated as it changes. So to all of our guides and all of our tour directors and operators, feel free to reach out to our accountants here if you have any questions, and stay tuned to to IATG if you for any updates that we come across. So we love to work with you and help you out in this time of need, and we hope we can continue to be there for you as much as possible. So thank you all for being a part of the community. We love you guys, and we are here to help as always.